What's up, everyone? All right, so in today's episode, I'm going to give you my watch list for Monday morning and the game plan for what will be our first full week for the month of May. Now, May right now has gotten off to a fantastic start. Thursday and Friday, two really nice big green days for me, and hopefully for many of you as well. We had some great momentum. Now, what's interesting is that the catalyst that was driving the momentum on Thursday and Friday was actually the same catalyst that was driving momentum the beginning of the week before on UPXI. It was a crypto catalyst. In the case of UPXI, it was a $100 million private placement, but those funds were to be used for the purchase of cryptocurrency. And so we saw a very similar headline on Thursday and Friday this week. And so that's what really got things going. So you better believe that coming into Monday morning, I'm gonna be paying really close attention to those headlines. Now, I sort of wasn't sure. Sometimes when you have a kind of a theme or like a headline like that works, it works really well the first time, not so well the second, not so well the third, and you sort of get diminishing returns until people are like, all right, I don't really trust it. So that is a risk that it'll get sort of played out. We may see a number of other companies that try to jump on this bandwagon. So a lot of small cap companies pay attention to these themes in the small cap space. And whether it's AI, NVIDIA, cryptocurrency or something else, when that's the thing, they kind of put out headlines that favor that. I remember during the pandemic, we saw a number of companies that would just start putting out random headlines related to like COVID testing or things like that, just to kind of try to jump on the momentum, because during that time, any company that was doing testing for, at airports or vaccine stuff, they just, all of a sudden the stock would get this big boost. And then of course, eventually it was, MNRA that got the sort of big move. But nonetheless, right now it's certainly worth paying attention to. So FRGT was the big move on Friday. This thing went up 250% in about 25 minutes. That was awesome. So Friday for me locked up a solid green day. $40,000. And you can see it kind of stair-stepping up right now in the P&L. So I'm like, all right, Monday, Tuesday, Wednesday, Thursday, who knows, right? Let's keep this is a trend that I want to maintain. Realistically, maybe Thursday, Friday were kind of the peak. Monday's going to be slower. I don't know. We'll see. $30,000, $40,000 days, though. I'm not going to complain about that. So the reality is FRGT made this huge move. That was great. And then it kind of pulled back and was unwinding as the day went on. KIDZ, this one's interesting. Big move on Thursday and continued Friday pre-market, sold off sort of during regular trading hours until the afternoon when it rallied back up to a new high. However, you could see it hit a new high, rejected, rallied back up, rejected again into a halt, and then really sold off going into the close. So KIDZ had a chance at giving you kind of a Friday short squeeze there, but it just didn't happen. So that's kind of interesting. And now I'm sort of like just wondering how much more we get out of this catalyst before it sort of wears out. Now, the private placement news headline is one that I still feel confident on regardless. But the crypto aspect of it specifically, I think we'll have to kind of just be on our toes a little bit and see whether or not this continues to work and if traders are buying up crypto sympathy catalysts, or if people kind of get off put by them at a certain point because basically with something like FRGT, this is going to give shorts some conviction of, I'm just going to add because eventually it's probably going to come back down. Now, that didn't work so well on KIDZ, right? You added at the beginning of the move, and next thing you know, it's just continuing higher. So when you get the reversal, that's what gives shorts kind of that feeling of like, all right, the next one, I'm going to try to add a little sooner because we're seeing these big reversals. But UPXI, going back a couple weeks, this one also, this went up over 1,000% from $2 a share to 22 bucks. So anyone that was shorting the beginning of that move certainly got squeezed out. So in terms of watch list for Monday morning, we're going to start by pulling up the after hours top gainer scanner right here. And we'll just see what did we have that was moving. KWE. Now I already saw this one And there are a couple things I noticed about it. Number one, super low float. Same with JDZG. However, JDZG is 85 cents a share. KWE is at 7.55. This, for me, is really like a perfect price. I really like this price range, the $5 to $10 range. Easily can get 25, 50 cents a share on these when they start to squeeze. It wouldn't surprise me at all if this squeezes early pre-market on Monday. The question will just be whether or not there's anything left for those of us that don't sit down till a little later in the morning. You can see it does have a little history of popping and dropping right there. Green candle there, green candle there, green candle there. Lots of room to the 200 EMA. So no nearby resistance. Hasn't done a reverse split recently. It was back in November. So now it's did the reverse split, sold off a bit more, is kind of based out down here. And I can't help but wonder what their financial condition looks like. So let's look at the filings for KWE. The reason that I'm saying this is because sometimes right after a reverse split, you'll see the company put out good news. But now at this point, the reverse split was some time ago. Now, what was the date of this filing? So this was December 2024. All right, well, it's... And then we've got a shelf registration. So a shelf registration, February 26. All right, so this shelf registration gives them the right to sell shares on the open market. Microsystems, sale of up to 8 million shares. Okay. So we've got a shelf registration, and what's their financial condition? So we're going to just look at the cash flow. I want to see their profit loss statement and then their balance sheet. All right, that's interesting. Okay. This is, I guess, what they produce. All right, so now I don't always get into this, but so revenue, cost of sales, so they've got a profit margin there. But wait a second. Oh my gosh. So except for the fact that their general and administrative is insanely high at $6 million. Their selling and marketing and their R&D, total operating expenses are $10 million, and they're producing only, well, I mean, after the cost of goods, they're only producing $400,000. So they lost almost $10 million. Jeez Louise. All right. Okay, so that's not very sustainable to lose $10 million a year. So then the question is, how much cash do they have on the books, right? So then we've got to look at their balance sheet to pull that. Let's see. For some reason, this is... balance sheet. Oh, sorry. I'm surprised I'm not finding it just with a search like that. Scroll down a little bit more. So I'm already feeling a little like this is going to be at higher risk of seeing an offering. That's our kind of biggest risk here, is that you would see an offering. So here's their cash. So they've got no cash, basically. So it's unclear, based on their current balance sheet, how they even sustained operations through, today's date. So I would say this is a company, based on what I'm looking at, which is just a brief, high-level look at their financials, that is at risk of doing a secondary offering and selling shares on the open market. So now you ask yourself, what was the catalyst behind this 30% move after hours? And there is no catalyst. So now you start to wonder, why it's going up, how much higher it's going to go, and whether or not it reverses. Let's see if they have an underwriter listed here. There's certain underwriters that we've kind of identified as when that particular underwriter is involved, offerings are very likely, but I don't see the name of an underwriter here. So I'll just search LLC. Sometimes that'll pull something up. Okay, so actually they did a private placement with some accredited institutional investors in February with Think Equity LLC. That's not one of the ones I've heard of that I would flag as being a concern. Okay, that's interesting. So that gave them the cash to keep things going for the time being. Okay. All right. Well, nonetheless, there's no catalyst behind it, so I'm not sure what is realistic to get from that. So did a little bit of a deeper dive on that one. Now we're going to look at the continuation scanner. ABVE, 530% range in the last couple weeks. Yes. But 16 million share flow. CEP, I've seen a lot of traders talking about this one. Continuing to go higher, slightly higher float as well. It's just outside my price range at this point. KIDZ, I think because of this drop, it's probably done. You've got these two larger topping tails on the daily chart, so I don't think that that's going to work super well. RGLS, it looks like a buyout. JAGX, this one. So the thing with JAGX here is that it's a stock that I've traded in the past, Jaguar Health. It has a lot of room on the daily. And I would say if this has a catalyst, we got the high of this candle, and this was only about 2.8 million shares. So it's not a super high volume candle. So if we get a news catalyst, this is one I would keep on watch. So I would say, is it on the watch list? This is the type of stock where I just keep it in my memory, JAGX. So say it 100 times, no, 10 times. Say it 10 times. Remember that symbol. Remember its low float. And remember that if you see it hitting the high day scanner and you notice it's got news, it's one to pay attention to. So now, if it hits that scanner, I'm already a little familiar with it. So that's kind of what I'm thinking on that one. It's not like I'm going to buy it on Monday morning. Absent news, it needs to be squeezing, but if it starts squeezing, maybe. ZYBT. So this one, blue sky over 14-ish. So I don't dislike that. 4.47 million share float, Chinese company. Needs some fresh news. Speaking of China, S&P 500, just to take a big picture look, it's interesting. April, and I kind of said this. So April, we had this big sell-off and then came back up. So I think the financial advisors were relieved because their April statements end up being like not too bad. If April had closed right here, then everyone's April statements would have shown like a huge drop. But we dropped and then we recovered. And right now we're back actually above the 200 moving average. There were some employment numbers that came out on Friday. They weren't bad. So market came up a little bit. They weren't like anything crazy, but they weren't bad. So market rallied up a little bit. And, so now we're reclaiming the 200. Can we hold it? I don't know. That's the question. The thing that I will tell you is that personally, I feel uncomfortable as a long-term investor with the amount of volatility in the overall market. You think about all the people that have pension funds and 401ks and IRAs, long-term tied into the market. And, just in the last couple of years, how many 20% drops have we had? 20% drops, it's losing a fifth of its value. 1, 2, 3, and then, there was a bit of one there, not quite 20%. Well, let's see, I'll have to get out my measuring tape here, but doesn't really matter. In any case, it makes me feel a little uncomfortable. So sometimes people say, Ross, how do you invest long-term? And I'll tell you, it's funny because I'm really risk averse. I don't like putting a lot of money into the S&P 500 or just into the overall market of equities long-term. I've done that before. Earlier in my career, when I was trading, I would just take the money and put it into the S&P. And then I had to ride through some of these big drawdowns. And I was like, man, it took me a couple years to turn this small account, $583 into $1 million. I put it in the market long-term. And then in 3 weeks, it's down 200 grand. Like, I feel like kind of like an idiot, I mean, yes, it rallies back up, but, it just feels like, gosh, that's not great. So I've taken an approach of putting a lot more into fixed income, and just to reduce the kind of beta where when the market drops 1x, my account drops, maybe at this point, probably only about a quarter of that. So, it's for me how I feel most comfortable. And I think it's interesting how so many Americans have so much money tied into the market, and we're just experiencing these high levels of volatility. Um, it just creates a bit of like instability, and I don't like that being the case. So right now, I think there are a lot of investors that are looking at kind of repositioning their long-term stuff to be less tied into, the U.S. equities market, just because this level of volatility, and combined with the high PE ratios, makes it feel very risky. Warren Buffett's sitting on all this cash, and I think that also speaks to the fact that there are some big money investors that are like, this market is just too rich for my appetite. So anyways, so recent IPOs top moving, realistically, except for FATN, none of these are really something I would consider that seriously. So at this point, if we look at my, we just look at like the last 30 days, we're going to do a little deep view here. So we're going to go last 30 days. All right, so over the last 30 days, maintaining 77.5% accuracy. All right, so the strategy right now is working very well. $2,500 average winners, $700 average losers, $500,000 of profit. When am I trading? Well, every day of the week. Mondays have been really good, so all right, Thursdays also good. And what time? Well, this really, if we broke this down by 15-minute window, 6:45. I got some trades before 7, but for the most part, trading between 7 a.m. and right now up to about 10. And that's my window. I know there's traders on the West Coast that don't even sit down till 9:30, but at that point, I'm pretty good. I feel like I've done a good job. I've made some money, and so I'm kind of wrapping it up. So at this point, the first 2 hours, well, first 3 hours, from 7 a.m. to about 9:30, 10 a.m. is when I'm trading the most aggressively. All right, what type of stocks am I doing well on? Stocks priced between 2 and 20. That's it. That's the focus right there. And the 5 to 10 is especially strong. That 5 to 10 range can get really nice. Now, FRGT on Friday was between 2 and 5, so that was fine. But 5 to 10 can be really good. So when I see a stock between 5 and 10, I'm taking bigger size on it. I'm being more aggressive. Now, if we look at the instrument, some of the stocks I've made quite a lot on, UPXI, that was the private placement catalyst, TIVC, BCTX, FRGT. So a number of stocks that are all going to be similar in price and float. I do better when we've got higher volume. Yesterday, so I'm recording this on Saturday, by the way, I'll upload it on Sunday. But so on Friday, the big trade on FRGT, that already had 15 million shares of volume before I even took my first trade. And how much volume did it have by the end of the day? 163 million shares. Incredible. It was the most obvious stock. So asking myself, is this the most obvious stock today? And focusing on stocks that have 5 times higher volume than their 50-day average. This is the recipe right now. And this recipe is producing excellent profit, excellent daily average, and great accuracy. $27,000 a day. Now, my goal this year is 5 million. So to hit that goal, I need to maintain 20,000 a day. Over the last 30 days, I've been at 27,000 per day. So I'm above average right now. But that's good, because if we do year to date and we take sort of the bigger picture, you'll see that I'm at about 19,600. February was good, but then March was a little slower. So it bounced back in April, but getting to that $5 million spot, I'm still a solid $3.5 million shy of that level. I need to keep, I can't have downtime. I need to show up every day. I need to make sure I get the most out from the window that I can trade the best, and be aggressive on share size, trade at the edge of my comfort limit. And that's honestly, that's how we grow as traders, is to continue to trade at the edge of our comfort limit. So for me, that's trading more size. Trading longer into the day, I will do on a day when going into the open, like UPXI, I've got something that's really strong. But something that I've noticed, and I've commented on this, is how interesting it is that at the open, we see volume increase, but we also see spreads get bigger. That doesn't make sense to me, except for high-frequency trading algorithms taking advantage of traders who use market orders, because that's what happens at 9:30. People start using market orders and they start using stop orders. So now you're getting these bigger whips, as market makers are doing stop hunting and people are executing market orders and getting a ton of slippage. Because when you send a market order, you're telling your broker, get me shares and I don't care what price. So now they go and execute the order and you get that slippage on the entry and on the exit as well. So right now, for me, pushing the edge of my comfort zone essentially is taking bigger share size, kind of as big as I feel like I can handle the loss that would be on the other side if it goes wrong. And that's what it's all about, risk and reward. So if I take a trade with 20,000 shares and I lose 20 cents, I'm down $4,000. I can tolerate that. If I took 200,000 shares, I'd be down 40 grand. I can't tolerate that. So you've got to find that spot that is, the most you're willing to lose. And then for me, when the market's hot and I'm in this sort of place of building confidence, increasing risk and being more aggressive. So here's what I'll do for you guys. I'll put a link where you can do the 2-week trial right here at Warrior Trading. It'll be in the top of the comments and it'll be in the description. And I encourage you to start that trial today. Come on in, sign your market data agreements, and then Monday morning, 7 a.m., when I start streaming, you'll be able to log into the chat room, and guess what? You'll have access to Day Trade Dash, my scanners right here. You'll have it on your desktop, not just on screen share. You'll actually be able to open it and pop them out and adjust them as you like. You'll have my scanners. You'll have my charts. You'll have my news feed right here, this news feed, the breaking news feed, and you'll have access to the chat room and my live audio video broadcast. You'll get 2 weeks of access, and I think you are going to be blown away by everything you're going to learn over the next couple weeks. So those of you guys who haven't already done a 2-week trial, make sure you start your trial today. We've got, right now, a window of opportunity. And although if you're brand new to trading, you should be practicing and trading in a simulator before putting real money on the line, this is still a great opportunity to learn because there's so much going on. All right, so that's it for me. Thank you guys as always for tuning in. The game plan for tomorrow is to watch those scanners, looking for stocks that meet the profile of the stocks I made the most money on last week. So although we don't have a very specific list of these are 3 stocks I'm going to be trading on Monday, my focus Monday morning will be watching this top gainer scanner right here and seeing which is the most obvious stock in the market. And I'm just going to hope that that's a stock that meets my criteria of the 5 pillars of stock selection based on price, rate of change, breaking news, relative volume, float, and news. All right, so that's it for me. Thank you guys for tuning in. Reminder as always, trading is risky, so please practice in a simulator before putting real money on the line.